Oh my gosh. All right, good afternoon, everybody, and welcome to our YouTube live video stream. Trending Thursday. My name is Glenn Tompkins, senior instructor here at VectorVest. My pleasure to be here. Man, got a lot of people in the room today. Good gravy. We've got a lot of people, so we're going to get hot and heavy real quick. Now, coronavirus, well, before we get into coronavirus, what do we do here on Trending Thursday for any of you who are new? Trending Thursday is a way of going out to the news, the news spectrum to see what stocks are making news, and we then bring it into the VectorVest software. We analyze stocks, and we help to corroborate the stories. If there are good opportunities to buy or good opportunities to get out if they're stocks that you own. So I see that Etsy's coming up in here. So we're going to talk a lot of these stocks that you're typing in the room are stocks that we're going to talk about today. So I try to stay hot and heavy on what's moving in the market. And Jennifer, if you're in the room, say hi to everybody. Jennifer is one of our social media people. She plays an integral role in helping me to find, excuse me, what stocks are moving by way of social media. So we try to look at a lot of different things in here. Doesn't look like she's here, but if she is, she'll say hi. If not, that's okay. Joey is here. Say hi, Joey. Hi. He's my right-hand man. He's my producer that helps me out, making sure that the stream goes well. So with that, no further ado, let's get right into the software. We're going to talk and spend a lot of time today in regards to what to do in the market right now. So as everybody knows, and yes, Paul, I'm really here. This is live. I'm live. This is not Memorex. I'm live. All right. The biggest thing is what to do in the market right now. A lot of people are nervous about the coronavirus. A lot of people have lost money in regards to the coronavirus as well. I am a big proponent as if you are a VectorVest subscriber, none of this should have caught you. None of this should have blindsided you. For anybody, oh my gosh, for anybody, I just realized you took that away from me. For anybody who's a brand new subscriber or you're not a subscriber to the software, you're in for a treat. So we're going to show you the power behind what the VectorVest software could have done for you. For those of you who are already subscribers, you should already know that the story of the coronavirus was something that we've been talking about here on Trending Thursday. I like to think that we stay on top of what's going on in the market to keep you ahead of the curve or in line with what's going on in the market. By the way, my name is Glenn Tompkins. I'm a senior instructor here at VectorVest. I didn't say that, and Joey didn't remind me to say that either. If you are also new here, don't forget to comment, like, and subscribe to the channel. I'm trying to grow the channel to 10,000 subscribers. Currently, we're at 9,200 and something. All right, so anyway, we need about 800 more subscriptions. If you're new here and you know people who are interested in the market and could get some information out of this, get them to go to our channel, the VectorVest channel, and subscribe. All right, now let's get into coronavirus has hurt the market and hurt the market a lot. Here's our homepage. From our homepage, you can glean a lot of great information. Here's our daily traffic light into the market. The color guard is bearish. VectorVest does not advocate buying any stocks at this time. Pretty straightforward. All right. Down below on the color guard, we have tracking 3 of our market timing indicators that you only find here in VectorVest. Price, which looks at the price movement of the VectorVest composite. The VectorVest composite is an indexed arithmetic average of all of the stocks that we track. We currently track 8,261 stocks in one indicator called the VVC. And we track its movement on both a week-over-week and day-over-day basis, and we assign colors to the movements according to what the indicator has done on a week-over-week and day-over-day movement. The price of the composite is red today because the price from last week fell on a week-over-week basis, and it has fallen on a day-over-day basis, red light. RT, this is an indicator that looks at the short-term price trend of the market. We're the only ones that have it. Is the market in an uptrend or not? Cast on a scale between 0 and 2, above 1, the market's in an uptrend. Below 1, the market's in a downtrend. But it also goes a step further. The higher above 1 it is, the faster in an uptrend the market is, and the more below 1 it is, the faster in a downtrend. Currently, we're at 0.81 based on a scale between 0 and 2. the market's definitely in a downtrend, and it's fallen on a week-over-week and day-over-day basis. We give it a red tile. The buy-to-sell ratio, we're the only people out there in this industry that look at the health of the market, because every stock in our database gets a buy, a sell, or a hold recommendation every single day. We look at the relationship of buy recommendations in the software divided by sell recommendations. Look at this. We have 3,805 sells, only 306 buys. Well, if the market is moving up, more stocks will get buy recommendations as the market moves higher. But as the market falls, less stocks will get buy recommendations, more stocks will get sell recommendations, thus letting us know that the market is showing signs of weakness. Now, there's another thing behind this BSR, or buy to sell ratio. When this indicator gets to a level of 0.20, the market is starting to look for a bottom. So for many of you who are saying, man, the market's going down, hey, I need to take advantage and buy stocks short. Oh, wait a minute, slow down. The market is at a level, because of how fast it's falling, the market is at a level where it's already starting to look for a bottom, and the lower below that value of 0.20 this goes, think about it as a rubber band. Here's 0.20, and if it goes lower, right now it's at 0.08, we're pulling the rubber band down further. Market rebounds, because it's gone down so much, it's going to have the propensity to go up and fast. Next indicator, the MTI, which looks at the underlying trend of the market, looks at the price, the RT, and the buy-to-sell ratio in one indicator. This indicator lets us know when the market's looking for a bottom, when it gets to a value of 0.60, knowing that right now it's at 0.56. Below that value, the rubber band is in effect again. Notice that both indicators are pulling below the levels where the market is looking for a bottom. Preeminently or eminently, the market's going to rebound. Now, the thing is, I can't tell you when. How do I know when a market rebounds or when a bottom is found, when the market stops going down and it starts going up? So this week, if you are a subscriber, I am doing the special presentation, and I'm going to show you how to nail and pinpoint market turns. All right, so with that being said, make sure you join us this weekend for the special presentation. If you are new, I want you to understand that we are offering a special trial to the VectorVest software, 99 cents for 30 days, and you have up until Sunday to do it. Is that right? Yep, up until Sunday to do it. And Joey just put the link in there. If you are new and you have not had a software, you had a subscription to the software, click on that link. 99 cents for 30 days, and guess what? You will be able to get to watch the special presentation this week. So I'm going to take this a step further. We now see what's going on, a lot of red in our color guard. This is our traffic light into the market. This is our daily traffic light, but this is our traffic light into the market. More red than anything. Red means stop. When you get to a traffic light, unless you live in New Mexico where Joey's from, on red he still goes. Me in New York, we probably still go too. But normally when you see this much red in the market or in our color guard, it is not the time to buy stocks long. Let's take this a step further. I'm going to open up the market timing graph, and this is that look of the VectorVest composite now shown in candlesticks. I can clearly see when the market's moving up, when the market's moving down, and when the market's moving sideways. Why is this more important than looking at the Dow or the S&P or the NASDAQ? Remember, folks, this VectorVest composite tracks the movement of over 8,200 stocks. So we know that the market was rocking and rolling, bada boom, bada bing, bada bing, bada boom, and then this happened. How could we prepare you for this? Remember I told you that when the MTI gets to a level of 0.60, the market's looking for a bottom? Well, if you're new, how about when this same indicator, the MTI, gets to a level of 1.5 to 1.6, the market is looking for a top. So how about this pullback right here? As a VectorVest subscriber, we let you know that the market was looking for a top. What did the market do? Boom. It fell. Knowing this information teaches you to tighten the stops on the stocks that you own. So for anybody who's out there saying, well, right now I'm losing a lot of money because the market's falling, look at the big move on the market right now. We are in correction territory right now with the big move to the downside. Well, how can VectorVest protect me against this? Now, great that you ask that question. So if I know where the values are when the market is starting to look for a top, how about this? This is known as a bearish divergence. I've now moved to a 3-month graph. I want to show you something. Here's the VectorVest composite. I'm going to connect some lows here. The market's moving up. All right, let me make that a little darker so that you can see it. There's the market moving up. Here's that indicator that looks at the underlying trend of the market, or the MTI. What was it doing while the market was moving up? It was getting weaker. All right, let's go put on darker. This, my friends, is called a bearish divergence. So if you're not a VectorVest subscriber, you wouldn't see this information. You'd be like, yay, we're going long, go, 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 go. I'm going to show you a couple of other things that VectorVest could have done for you. What's this candlestick pattern known as right here? All right, between these two candles, that is known as a bearish harami. What is this single candlestick pattern known as? That is known as a hanging man. That is not a pristine hanging man, but it is a hanging man nonetheless. What happened the day after that happened? We had confirmation of the bearish candle. Folks, this would have been a great day to get out of the market by way of VectorVest in giving you the heads up of knowing that the market's moving down, the underlying trend of the market, the market's moving up, underlying trend of the market's moving down. Folks, would that have been a good time to get out of the market? Type it in the room. For anyone in here who's letting me know that they are losing money in the market, this is the power of the VectorVest software and why you really might want to consider taking the 99-cent trial that, again, is only active until Sunday. So let's say you got out here after the market gave you, it broke down through the trend line. We had the candlestick formation confirmed. Since then, the closing price of the VectorVest composite on that date was $51.90. Look at where we are right now at $47.93. That would have been a beautiful opportunity to get out in the market, but the warning signs were there. If you're a subscriber, again, you should not have been blindsided. Not only that, we've been talking about the coronavirus for like the last month in Trending Thursdays. All right, so keeping that in mind, I am going to go to our first story talking about backing up what's going on in the market. So the first thing is, what 3 things move markets globally? We have interest, earnings, and inflation. Earnings is the engine that drives a stock's price higher, or in this case, a market higher. And we also want low interest and low inflation. That is the Goldilocks scenario. Rising earnings, falling interest, falling inflation. Well, interest is still falling. All right, interest rates are still low. Inflation is at the price target that it needs to be, so the Fed is not doing anything. But wait, Fed's wait-and-see posture tested by the spread of the coronavirus. Top Fed officials says it's too soon to determine the full impact of the virus. So not only is it affecting the market, but it's affecting one of the 3 things that can move markets. If the market sees, or if the Fed sees that this is a potential issue, a bigger issue than what it looks like right now, they will tend to lower interest rates to spur up our economy. All right? Coronavirus and trade tensions are testing the stability of the global supply chains. While that pushed some businesses to consider loosening their ties with China, Wall Street Journal explains why leaving the factory of world is easier said than done. All right, so the coronavirus is getting to the ear of the Feds, and they're thinking about, right now, it is a wait-and-see posture, but we'll see what's going on with that. Another thing about what's going on in the news, the president put on a speech last night, and letting us know the CDC says how Americans should prepare for school and workplace closures due to the coronavirus outbreak. We now know, or we feel, that it will affect the American people And I like the idea that we are putting something in place as a way of containment, the best way that we can, so that we protect ourselves and our country. But that is out there, and that comes from the CDC. The rapid jump in cases in Iran, Italy, and South Korea over the last 4 days has prompted U.S. health officials to warn Americans about the potential disruption if the COVID-19 cases start to spread. So all of this is affecting the market as a whole, and I'm going to go back into the software and go to our watch list of stocks that we're going to take a look at today. The two that we always look at for the market are the VVC. Remember, that is the indexed arithmetic average of over 8,200 stocks in one ticker symbol. And I also use one that most people use, which is the spiders. So currently, we can see that both of them are down today. All right, I can see that both of them are hold recommendations, and I'm going to look at the graphs of the both of those. View the stock graph, pull those up. There's the movement of the VectorVest component. Again, looking at things like the price of the VectorVest moving up, whereas the MTI was moving down. Let's go add that parameter for the MTI. Where did it go? Joey, is it on here already? Is it here? Why is it? I'm on the VectorVest. It doesn't matter. I'm looking at the VVC, not the market timing graph. Doesn't matter. I understand why. But look at that movement. I've also got 3 and 8 exponential moving averages on the VectorVest composite. If I zoom in a little bit, how about the 3 and 8 exponential moving average crossed to the downside the same day that we got confirmation of these two candlestick patterns? Boom. Everything was aligning, and this was a beautiful time to get out of the market prior to 1, 2, 3, 4 big down days in the market, right? Number 2, let's go look at the spiders on the same 3-month graph or 3-month graph. There we go. There it is, the S&P 500. Same kind of scenario. Looking at 3 and 8 moving averages, same thing, got you out on 221 instead of riding it down the way that it is right now. How about this candlestick pattern right here, the day after on 224? That is a candlestick pattern known as a shooting star with a big wick at the top and followed through the next day. Folks, by way of either the spiders or the VectorVest composite, you had ample opportunity to get out of the market and protect yourself against all of this major foliage in the market. All right, so those are my 2 indicators that are looking at the market. We looked at the story that talked about what the Fed is thinking about and the story that the CDC has put out. Joey's in the background answering questions. So if Joey doesn't give me a question that I'm looking for right now, I'm going to move on to the next stories. Is there anything that I need to look at? Saborium says, on that MTI chart, the trend line on the upper chart has a different start point from the bottom chart, comparing apples to oranges. No, Saborium. All right, so let me break that down for you. If I look at the graph, you're absolutely right. That's not the graph I want. I'll still use it. From what you were just talking about, why can't I add the MTI? Oh, I know why. Let's do it this way. Market timing graph. There we go. I'm going to do it that way. Looking at the market timing graph, I may not have drawn the lines the same place. All right? You're absolutely right. But Saborium, look at this. Overall, as the market is running higher, what's going on? Do you not see that there is definitely a divergence? It's not apples to oranges. I'm still, even right here, where the market, where the MTI was above that value of 1.5, telling me where the market was looking for a top, what did the market do? It fell. So even after it fell, you would think that as it rose again, Saborium, that the underlying trend of the market should rise with the price, but it did not. Thus the reason why I am comparing apples to apples. All right, I am comparing apples to apples. Any other question you want me to point out? You wanted to point out, Joey? Because there's a lot of stuff going on today.
What about J's?
It was brought up as a bearish divergence of indicators. So that is correct, and that's what I'm pointing out. The MTI was going down as the price of the VectorVest composite was going up. Color Guard says not to buy stocks long, but do you have guidance on when to sell short? Good question. So now, let's talk about that. How comfortable are you playing the market to the downside, knowing that we're already in correction territory? I'm going to show you something else. I'm going to put this about on a 1-year graph. I'm going to show you the most recent level of support to try to answer your question. All right? So I want you to think about how comfortable you are selling stocks short right now. Why is that not moving? Oh, that's why it's not moving. Let's go put it on a horizontal line. This was a good level. I'm eyeballing it. This is a good level of resistance, good level of support. Look at the bounce right here off of that level. Let's go change that, make that a little darker. All right, look at that. That's a beautiful level of former resistance, current support. We broke through that. Let's talk about the next level of support, which is on this 1-year graph, looking at this low. Looking at this low. If I want to get a little closer to that, let's bump it up right here, another good level of support. Let's bump that out, make that a little darker. Do we have downside? Yes, we do. Would I buy stocks long, sell stocks short right now? Look at what's going on with today's candle. What's that at the bottom? That shows me some buying pressure that the market is trying to get to a level of rebounding. Now, if I want to get a little closer to even another good level of support, let's use today's wick, which would now put us at a level of support at $47.39. So I am future trends. Does that make sense to you? If I've got some downside, I need to break below this level of support right now. All right, does that make sense? I am future trends. Yes or no? Does that make sense? All right. So Glenn, what did you do when and at why and at what time? So Richard, what we just talked about, I showed you the opportunity where you could have gotten out of the market prior to all of this downturn in the market, looking at the MTI or the underlying trend of the market going down while the market was going up. Couple of things. One, here's a trend line. All right. Number 2, looking at the candlestick patterns. Number 3, looking at the candlestick patterns with follow through. Number 4, I also put a 3 and 8 exponential moving average on the VectorVest composite to help me. So when you say, what did you do and when? This is the what, this is the when. When the market started to pull back, when I had candlestick formations, when I had the MTI, this was the time. And let me go put on the actually right about here. That's the date on 2/21. So does that answer your question, Richard? Hopefully it does. Does that answer your question? Everything came to fruition right here. All right. And now everybody can say to me, well, you know, this is hindsight and hindsight's 2020. Man, I ain't taking that. I'm not taking that, not even a little bit, because as a subscriber, we were talking about this on a nightly basis in the Daily Color Guard Report. So no, I am not in this case taking the idea that this is hindsight. We walked you through this at the right time. So as a subscriber, you know that. As if you're not a subscriber, taking that trial will at least open up your eyes to see these kinds of things as they're happening. Richard, does that make sense? So there's my when and what in the whole 9 yards. Does that make sense to you, Richard? All right, I hope it does. I hope it does. All right, so I'm not pissed off, Jay, not even a little bit. Huh? All right, let's go to the next story. Whew. This is hot topic. Knowing what's going on in the market is hot topic. You were talking about it. Thank you. All right, go ahead. Take that off so I don't have to see that. Joey is trying to keep me on track for today. Let's go to the next story. All right, big story that hit. Disney. CEO Bob Iger steps down. Company veteran Bob Chapek takes the reins. Iger's been around for a minute, right? The Walt Disney chief, Bob Iger, abruptly stepped down Tuesday, sending shockwaves through Hollywood, Wall Street, and Silicon Valley. And Bob Chapek, who has served as chairman of Disney Parks, Experiences, and Products since the creation of 2018, was named Iger's successor, effective immediately. So this is talking about one of the streaming stocks, which is Disney. And I don't know what made him step down, but nonetheless, that's going to affect Disney, and we'll see how coming up in the future. Next one that I want to talk about as far as the streaming stock, how the coronavirus could boost iPhone 12 sales. We don't have the 12 yet, do we? Oh, okay. The continuing fallout from the coronavirus is expected to bring serious pain to Apple. Just in case you didn't know, Apple has already said that their forecasted earnings or forecasted revenue was already decreased. So when I'm going to let you know that when earnings comes out, Apple most likely will miss earnings, most likely, but they're already preparing their investors about it. When it reports its earnings for the fiscal quarter 2020, the company already made as much clear after the announcement it would hit its previous revenue guidance for the coming quarter and chose not to offer new guidance range. But analysts and investors aren't responding with despair over the lost sales, which could total between $4 to $7 billion across its product lines in the second quarter. Instead, they're focusing on the launch of Apple's next generation iPhone this fall, which is expected to be the first phone with 5G capabilities. So even with the coronavirus affecting Apple in a bad way because it's affecting their sales over in China, and because a lot of the Chinese factories are closing down that make their parts, people are still anticipating a big move because of the iPhone 12. I don't know anything about the iPhone 12. Right now, here's my phone, Joey. Here's my phone. I got the iPhone 11 Pro Max. Don't be looking at all the stuff that's on the screen. But Joey's got, what do you got, Joey? He's got the iPhone 1. So, yeah, that's what he's got. He's got the iPhone 1. But people are still looking for, from an Apple standpoint, anticipating what the iPhone 12 is going to be all about, especially because it's going to have 5G. And Amazon is in the news. Out of stock. Coronavirus in China threatens Amazon sellers, saying Amazon's rankings algorithms demotes products that are out of stock. Many are raising prices to slow the sales, looking to shift production. Man, coronavirus stories are all over in regards to anything that's in the market. And my last one for the streaming wars, Netflix may struggle amid an expensive business model and growing competition. Everybody knows that Netflix is still the big boys when it comes down to streaming, but everybody's putting their hands in it. Whether it's Amazon, whether it's Apple, whether it's Disney, everybody's getting their hands in the pot. There's a lot of money to be made, but it may be affecting Netflix in a negative way soon coming up. So let's go back to my watch list. What'd I do? Did I not do it right? No, I didn't. Hold on, let's try this again. Here's our watch list. In here, we're looking at Netflix, we're looking at Apple, we're looking at Amazon, and we're looking at Disney. Here's the 4 stocks in the streaming. Let's talk about them real quick. Netflix, way over its value. That doesn't make it a bad stock. It just means that people are willing to pay a premium to own it. Apple, very close to its value. I'm going to call that fairly valued. Our mantra here in VectorVest is to have you in safe, undervalued stocks that are rising in price, but because the stock is overvalued doesn't make it a bad thing. We assign a value for every stock is what we feel the stock is currently worth based on earnings growth, and other things that are included in assigning a value to a stock, and the value is not a price target. Amazon, way over its value, but it has been ever since it came to fruition. Disney, over its value, but I know why it's over its value. It put a lot of money into getting Disney Plus out to the world. All right, so their earnings took a big hit over that. Let's look at our indicators. RV, the stock's upside potential. RV, RS, RT, VST, and CI, all of these indicators are cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Upside potential. Netflix has the best upside potential. Relative value looks at a stock's long-term price appreciation potential as compared to an alternative investment in AAA corporate bond. What I'm going to say with Netflix should outperform that AAA corporate bond by 14%. Apple should outperform that AAA corporate bond by 2%. Amazon is right on par with that AAA corporate bond. And Disney, for the long term, you probably don't want to hold it long term right now because the stock will underperform a AAA corporate bond. Safety. It's the indicator of risk for the stock, and it also looks at the consistency and predictability of a company's financial performance. Do these companies meet or exceed their earnings expectations predictably? All right, Netflix above 1. Most likely, this stock is going to have a high probability of meeting or exceeding earnings. Interesting about Apple, this is the safest stock out of the 4 at a value of 1.4, but the news came out that they are most likely going to miss what they're trying to hit for the second quarter. We'll see what happens. Amazon's got a relative safety above 1, most likely will hit earnings. And Disney, even though the upside potential is not there, the stock is still a relatively safe stock right now. Last but not least, RT looks at the short-term price trend of the stock. Is it in an uptrend or not? Netflix at 1.35, in an uptrend. Apple, currently not in an uptrend because the RT is below 1. Amazon, not currently in an uptrend, the RT is below 1. Disney, not currently in an uptrend because it's below 1. Now, let's take this a step further. Let's right-click. Let's view the stock graph. Let's look at just these 4 graphs. In the streaming wars, which stock would be the best one to look at? Let's put this on a 3-month graph. Looking at today's activity, I am looking at VectorVest real-time data. How about today's candle is open? I got a wick at the top. I've got some selling pressure going on with Netflix today, but look at the 3 and the 8 exponential moving averages. They just crossed today as the stock is bouncing off a level of support. I like that even with the coronavirus information going on, the stock is preeminently rebounding. I'd love to see if the stock can take out that high before I jump on board. Open candle, good open day, but a lot of selling pressure with the wick at the top. The earnings per share higher than it was 3 months ago. And not only is the stock moving, it's doing so on good volume. Volume is conviction. It helps me to understand that people are behind the stock, moving it higher. Let's go to the next stock in the list. Apple, getting beat the heck up because of the coronavirus. So, this is affecting them being able to sell phones globally, and the stock is feeling that heat. How about this? The 3 and the 8 exponential moving averages fell on 220. Number 1, if you needed more confirmation to get out of the stock, here's a level of support at 302.69. Boom, it fell through there and still falling hard, and look at the volume. Now, I do like the earnings is higher than it was 3 months ago. This is the old adage. This is a bad time to be in a good stock. The stock overall, I love the upward move. The stock is falling. It's created a level of support. Let's see if that level of support can hold with today's wick. Let's see if that level of support can hold. And if it does, this could be a good rebound, but I need more confirmation before I go and buy it now. Next stock in the list, Amazon, also broke through a level of support, but look at the body, back above that level of support. So what did it do? It fell, tested that level of support. The 3 and the 8 still haven't shown me if the stock is going up right now. A lot of selling pressure today with a big wick at the top. Earnings per share higher than it was 3 months ago. And the last stock is Disney. With the move of Bob Iger leaving, look at the move of the stock. Look at the volume behind it. Not only is the stock falling, but people are selling it emphatically. Earnings is lower than it was 3 months ago. Be careful with Disney. Right now, I think even though with the Disney Plus, they're really gigging on that to try to get them pushed back into the right direction. All right, so that is the stream wars. Anything that I need to talk about, Joey? Point out which ones. Which ones? Which Jay's first one? Only 31.
Future trends again.
Sorry. All right. Does RV for Disney and your news story mean it is a good candidate to sell short right now? Watch the sell short right now. If I'm going to sell it short, I want the stock to continue. Right now, the stock is trending down. You see a little bit of a rebound today, even though it's got a lot of selling pressure. If I'm going to think about pulling the trigger on anything, let's make sure that it goes down below the low. I want confirmation. In Casserole, hold off on stocks. I will give you an opportunity to give me stocks at the end. All right, at the end. So hold on to your stocks. Don't ask for the stocks yet. I will get your stocks for you. Netflix as a regression trade. Let's go back up to Netflix. As a regression trade. Oh, I know what you're saying. Because it bounced. Yeah, I like that, but I definitely want to see it take out the high, Jay. I love that the 3 and the 8 failed, that the stock found a level of support, that the 3 and the 8 now is back in play, the earnings is higher than it was 3 months ago, and that the volume is behind it. And I'm looking for that. Kev says, was it a good time when the 3.8 crossed above on Disney? And yeah, when back here, when was the last time the 3 was above the 8, Kev? It was like right here, but the stock moved sideways. And even if you were using the 3.8 to get in on Disney and get out, you probably were flat on the trade or slightly down. I'd rather take slightly down than riding it down right here. All right. Again, folks, hold off on the stocks. I can't pull them up yet. I can't do it yet. I got a lot to get through, but I will pull your stocks up. All right, so let's go take that off for me, Joey. Let's get to my next story, and we'll go back to the news real quick. Our next story is talking about our coronavirus stocks. Drug maker Moderna delivers first experimental coronavirus vaccine for human testing. That is huge, and if you've been watching this stock has been rocking and rolling. Clinical trial is expected to start in April, all right, as epidemic originating in China spurs quick response. You know what else happened with Moderna as well? How about just a couple of days ago, it beat earnings. Moderna was up 17% on February 26th, which is that yesterday? Today's 27th. This was yesterday on quarter 4 results. They beat revenues, 14.7 collaboration revenue. There it is. They were looking at being down 67%. Even though they were down, they were still higher than they anticipated. Net loss, 2020 guidance, net cash used in operating activities and for purchases of property and equipment, 490 million to 510 million. Listen, all I know is it beat and it went up. We're going to get into that in a second. Another stock in that field is Gilead. Now, right along with Moderna, Gilead initiates two phase 3 studies for coronavirus. So 2 stocks at the top are out there rocking and rolling, putting in the work to get a cure for the coronavirus. And I'm going to talk about that in a second. I'll come back to that story. All right, so let's talk about those 2 stocks. And because you are here in Trending Thursday, I am going to show you or give you access or show you a coronavirus watch list that I've created for you guys. So let's go back into the software. The 2 stocks that I just talked about were Gilead and Moderna. Let's analyze them real quick. Gilead, slightly overvalued. Moderna, way overvalued. Now, another thing, these stocks, by way of fundamentals, RV and RS, are not fundamentally sound. And that tends to happen with the majority of the pharmaceutical companies that are out there. They put so much money into research and development, and they don't always get it all back because sometimes the FDA says, no, this is not ready, you can't send it, and they just spent all of that money. So a lot of the pharmaceutical companies will normally have earnings growth rates at a negative clip. All right, they won't tend to grow their earnings. But what is happening is that indicator RT is telling me that they're both up in uptrends right now. Gilead is a buy, while Moderna or mRNA is a hold. Let's take a look at these both stocks on a graph. Move this over. There's Gilead. Gilead took a big hit today. Gilead took, even with the news that they're going out to the FDA with 2 phase 3 trials. Let's take off the last close. Gilead got hurt. But from last week, when we talked about Gilead, it was on the rise. Today, with the news, and it's interesting that even with the news, that it fell as hard as it did. The stock is still a buy recommendation. I don't like the earnings per share, but most likely I won't like the earnings per share when it comes down to pharmaceuticals. Really what I need to know is what's going on in the news and looking at things like the 3 and the 8. The 3 and the 8 are still good on it. Notice that the 3 and the 8 are good even on the pullbacks, which is why I really love the 3 and the 8 to keep me from ever panicking on any stock. Let's go look at mRNA. That was a stock gapped up, pulled back. Now, what's a lot of this pullback on both of these stocks? Anybody want to put out in the room what it is? A lot of that is profit taking. A lot of that is profit taking. All right, so right now, what am I looking for before I jump on board with them? I definitely want to make sure that they take out their highs before I jump on board. The 3 and the 8 is still good on Gilead. I need the stock to move higher. The 3 and the 8 on mRNA are still good. I need it to move higher. But neither one of them have really good earnings. So these are not solid fundamental plays. These are trades. And for the most part, watch this. I've got that watch list for you. Let's go look at a whole listing of Corona stocks right here. You guys do not have this, but you can go out to the internet and Google coronavirus stocks, and you can build your own watch list just like I have right here. I've got 27 stocks in here. I've sorted the list so that I can find which ones are moving up the most. So I'm looking at percent price change. How about 1, 2, 3, 4, 5, 6, 7, 8 of these stocks are in double-digit gains today. So you know the cool thing about this, knowing that coronavirus is such a big story, how about you look at these stocks, put them in a graph, and you can time when to get into them, especially because you know that they are trades, they are not longer-term holds. But if you could make half of the moves on these, you'd be a happy individual, wouldn't you? All right, so a good way to get this listing of coronavirus stocks is to go out, Google coronavirus stocks, build your watch list. Right now, I currently have 27. Now, if I am looking for a stock in the coronavirus field to look at the hold long term, let's sort this list by relative value. The same 27 stocks. How about BIIB? It's got a really good chance to outperform a AAA corporate bond. Number one. How about the relative safety above 1? The only thing that's hurting BIIB right now is that it's going down in price. But fundamentally, in this space, BIIB is a fundamentally sound stock with an earnings growth rate of 17%. Also, AbbVie, undervalued. Both of these stocks are undervalued, which is hard to find, especially in this field. And good upside potential, good safety, hold recommendation, grows its earnings by 13% a year. And I can go down this list. Let's see which ones have go up more than they go down. Let's talk about Comfort Index, or CI. The stock's ability to withstand long or lengthy price declines. I can take these same 27 stocks, use the power of the VectorVest software to hone in on what I want. So I know that Beyond Air goes up more than it goes down. It is less susceptible to a big pullback in price. That's what that indicator CI will do for you. Followed by Solengenex. See, a lot of these stocks you don't even know about. So guess what? We get to introduce you by way of this watch list and by way of what's going on with the coronavirus, we introduce you to stocks that you didn't even know about. But that goes by sorting or force ranking by our indicators that you don't have anyplace else but in VectorVest. That's the power of what you need to stay ahead of the curve and be a part of what's trending today. All right? So with that being said, I think any questions that I got to answer?
Yeah, I think Kev asked about the 3 and 8 on mRNA.
mRNA. Kevin, what about the 3-8 cross on mRNA? Let me go find it. Let me sort this by dollar change, mRNA.
It's in the watch list.
I'm in the watch list.
No,
Oh, my watch list? Yeah. All right, let's go do it that way. 227. Let's go to mRNA. Let's go right-click, view the stock graph. So Kev says, what about the 3-8 cross? Is it cross bullish? Or is it bearish? It crossed. So even though I said, Kevin, even though it's got a big down day, a lot of profit taking, what did I say? That the 3 and the 8 was still in play. The 3 and the 8 was still in play on the stock. Leave it alone. Now, if you have individual stops on the stock and it got stopped out, that's fine. But if you're going to give the stock a little bit more room, especially knowing that it is a trade because it's a drug biomedical, and you use the 3 and 8, I think the 3 and 8 does a good job. Look at the 3-8 cross here and cross out here. You made money. How about the 3-8 cross here, cross down right here? Pretty flat. How about the 3-8 cross here? It hasn't crossed down bearish yet. All right. Is that short? No, this is long. This is the 3 and the 8, the 3 crossing above the 8. That's a bullish play. That is a bullish play. All right. Joey got it wrong. So what is it? I don't know. I don't know what he did. All right. So All right, so I like that. Astro, the bearded dragon, said just screenshot it, the list for the coronavirus. Folks, I want you guys to use that. I really do. Keep your eyes on that. I believe it can make a lot of people in this room a lot of money when you look at the stocks that are coronavirus stocks. All right, and I like that Badger says you can always watch the replay of the webinar as well. All right, let's get to my next story. The next story is, not only is coronavirus hurting the market, how about because of the jitters, gold hits a new high. I can read all of this, blah, 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 but this is the story. Gold hits new highs. So let's do this. Let's go back. Let's talk about gold. Let's talk about gold, baby. Let's talk about you and me. Let's talk about all the money we can make. That makes me happy. Why you take that away? Okay. Anyway, so I'm using one indicator that looks at the gold bugs, looks at the whole industry on gold, the HUI. All right. I'm going to right click on it. Let's take a look at the gold as an industry. What is it doing? When the coronavirus hit and talks about it in the news, how about gold took a big pop to the upside? That's beautiful. What is it doing now? It's pulling back, but the 3 and the 8, Kev, are still in place. The cool thing about using the 3 and the 8 on any stock is it helps to keep you from panicking when a stock pulls back. Because right now you sit here and you go, oh my God, I'm pulling out of that because of that. Let the 3 and the 8 do its work. That's what it's there for. All right, to keep you from panicking. So now I'm looking at the 3 and the 8. Bupin says, Glenn, how you created the coronavirus list using VectorVest? I didn't. I went out to Google. And I Googled coronavirus stocks, and that's how I built it into VectorVest. So no, when the 8 crossed the 3 above, that's a good short. When the 8 and 3 cross, no. So when the bearish side of it is when the 8, you're right, when the 8 crosses above the 3, that's a bearish play. And not only did they come down on the Huey on this point and found a level of support, bounce back up, 3 and the 8, and then it started moving sideways. When a stock moves sideways, moving averages don't work nearly as much on a sideways moving stock. What Corona stock is about to rocket that I can hop on? Listen, one thing I will never do in this room, I will never prognosticate on what's going to happen. I never will. So this is why I'm telling you to go look at building your own coronavirus stocks, put them into a watch list. So now, how do I know which ones are going to definitely go up? I don't know. I'm not going to lie to you. I'm not going to blow smoke where it don't belong, because that's not how I do business. That's what I said, business. That's not how I do business. But I can always look at the graphs of these stocks and help me to determine when it's the right time to get in, especially knowing that these are trades. All right, does that make sense? There's APT. A lot of these stocks, look at the big moves up and look at the pullbacks. This is why these are trades. Look at the sell-offs on the big wicks at the top on each and every one of them. So when you get into these stocks, you make sure you do it nice and early in the morning if you can. If you can't, then don't trade them that way. All right, if you can't, then don't trade them that way. That is my best answer to you. Let's go to the next story. How about this? Wells Fargo got caught with the hand in the cookie jar. Woo-wee. They were eating the chocolate chip cookies too, right, Joey? Mm-hmm. And the butter pecan cookies. Anyway, Wells Fargo to pay $3 billion to settle fake account scandal probes. So in case you didn't know, back in the day, for a little bit, Wells Fargo was trying to boost up sales, so they were making fake accounts, and the reps were getting paid on these fake accounts. They found out Wells has to pay $3 billion to settle the fake accounts. All right, what else is in here that's in the news that's making moves? Beyond Meat again. Beyond Meat is now moving to Starbucks. Beyond Meat is getting into everybody's business. They doing it. Beyond Meat is getting into everybody's business. So let's take a look at those two stocks. That's just in there as stocks that are really making the news. Let's go back to my watch list, 227.20. And let's go find Beyond Meat and Wells Fargo. Let's go see if either one of them, both of them at the bottom of my list. Now that's by our master indicator VST, value, safety, and timing. At the bottom of my list. Beyond Meat, way over its value. Wells Fargo is overvalued. Notice the fundamentals, the RV and the RS on these stocks are no good. All right, they're all below 1. Wells Fargo is a sell recommendation. That really hurt them getting taxed for that, for those fake accounts. -3 as far as earnings growth. Beyond Meat, on the other hand, fundamentals are not there. The stock is in an uptrend because RT is above the value of 1. It's a hold recommendation. Interesting that Beyond Meat is growing their earnings at a clip of 39% a year. Let's go take a look at the graphs of these two stocks. There's Beyond Meat. What is it doing? Moving a tad bit sideways right now. Kev, look at Beyond Meat. 3.8 cross to the downside. What am I looking for if this is seeing if that's going to hold? Here's a level of support. Look at that. That's a good level of support. So as Beyond Meat is falling, look at where the wick stopped. Tom is in the room. Badger, type it in the room for everybody to see. Where did the wick stop today? Right at that level of support. And look at the buying pressure with the big wick. Now, I'm not ready to pull the trigger on Beyond Meat. What should I be looking for? Some confirmation. Love that it looks like it's trying to bounce off that level of a floor or level of support. I really want to see the 3.8 cross. Now, keep in mind that it's got a beautiful level of resistance sitting at the price of 129.10. So even if it does bounce, Kev, it's got a level right there at 1. If I do buy that early coming off the bounce, that's my profit target. That's a beautiful level of resistance. All right, that's on Beyond Meat. And the other one is Wells Fargo getting its butt kicked inside and out, inside and out. I wouldn't touch Wells Fargo. Now, interesting that it is coming to a level of support right here. I don't know if it's ready to bounce at all just quite yet. I'd leave it alone. The stock just got into a sell recommendation. The 3 and the 8 are definitely bearish. Definitely bearish. All right, let me close that out. Anybody have any questions I need to answer?
Yeah, Paul Roberts has one about the Huey.
Paul, where's that at? Paul, there it is. Is the Huey something created by VectorVest? Can't find it anywhere else. It is the gold bugs. It should be out there. Do me a favor, Badger. I believe, Badger, real quick, put it, go Google Huey. The Huey should be there should be out there by, it is the gold bugs. It is a way of tracking gold. So I think that it's out that way. Kev says Beyond has earnings today. Well, with a relative safety at 0.74, I'd be careful holding it through earnings. Now, earnings could be great. That's fine. But when I'm looking at relative safety, I'm telling you the chances are that most likely it should miss earnings. And even if it does go up, let it. If it goes up, let it. You know, if you want to be aggressive on it and play it, I'd probably play an option play where I'd buy a call and buy a put at the same strike. That's probably the way I would go. I'd buy a straddle on it. All right, if I don't already own it, I'd buy a straddle on it. The NYC Archer Bugs Index is modification. Did you just put that in, Joey? Mm-hmm. Oh, that's on the Huey. All right, I'm not ready for stocks yet. Guys, don't put stocks in yet. Not ready for stocks yet. Not ready. Stop putting them in the room because it's taking away from the questions that I'm trying to answer in the room. All right? I certainly can't recommend them to anyone. I hear you, Joff. All right. Let's take that away, Joey. Let's go to my next story. Actually, I could do that, right? Just do this. All right. Let's go to my next story. This is going to be my hit or miss segment. Stocks that earnings that just came out that hit or miss. Macy's holiday quarter beats the street. Investors skeptical on strategy. So earnings came out February 25th on Macy's 2 days ago. They beat. Boom. That's a hit. Let's go to Box. Next one. Box 7. They were up 7% on beats upside quarter one view. So they beat the quarter 4 estimates. Gotta love that. Boom. That's a hit. Number 2. Etsy. Etsy up 10% after earnings smasher. Not an earnings beater, but an earnings smasher. It rallies after topping fourth quarter estimates and setting full year revenue guidance ahead of expectations. Boom. Number 3, hit. Let's go to number 4, Booking. Wow, coronavirus is hurting travel, isn't it? Booking.com is feeling that effect. The coronavirus impact hits its guidance. So they fell. Boom. Number 1, that was a miss. So out of my 4 stocks that were hit or miss, 3 were hits, 1 were misses. So let's go take a look at their equity curves. All right, let's go analyze them real quick. So what stocks were there? Etsy. Etsy's nicely at the top of the list. How about Booking is at the top of the list by VST as well. What else? What was the Box? and Macy's. Let's analyze them real quick. Booking.com, nicely undervalued. I like that. Etsy, overvalued. Remember, because the stock is overvalued doesn't make it a bad thing. Box, overvalued. Macy's, undervalued. Let's look at our indicators. Upside potential. Booking's got good upside potential. They are just getting hurt by the coronavirus, which is going to affect their bookings for travel. Etsy does not have good upside potential. It's below the value of 1. I'm not sure I want to hold Etsy long term just quite yet. Box has an RV above 1. I'm not going to say I would not want to hold it, but I'd look at other things as well. Macy, one of the safest out of the 4, right behind Booking. Relative safe, that upside potential. Relative safety. The only stock that's got good safety is Booking.com. So overall, Booking is a good stock that's feeling the effects of the coronavirus right now. The other 3 have relative safeties below 1. Which stock is going up the most? Etsy is going up the most. This is more of a trade because Etsy, the fundamentals are not there, but the stock is in an uptrend and a buy recommendation. The biggest winner as far as earnings growth is Box. I actually have a Box account. I use that to store a lot of stuff on the cloud. Let's right click, view the stock graphs on these. So put them on 3-month graph. Question is, why do I always look at a 3-month graph? Because what happens every 3 months on the stock? Earnings. Earnings is the biggest mover on the stock's price. So that's why I always like to look at a 3-month graph. Love the equity curve of Etsy. Earnings per share looks good. Look at the volume. Everything looks good as far as price action, but we looked at the fundamentals. RV, RS, subpar. But price action says it's okay to buy the stock once the stock continues to move up. I do like that. Nice up day today, some selling pressure. If I'm not in it, I'd buy it a little higher than the high. I love the volume. Volume is conviction. Next one, Booking. Well, that makes sense with the coronavirus affecting their ability to make money and book rooms. It makes sense that it's falling. Earnings, though, does look good. Not a good time to be in this stock. The stock was running. It fell. It tried to do a little bit of a rebound, created a level of resistance, bounced back down. I'm not ready to touch Booking.com yet. And Box, even though it hit earnings, look at the selling pressure coming in with the big candle. That is something called a shooting star, but I wouldn't call that a shooting star unless it's at the top of a chart pattern. Right now, more so, I'd wait on Box even with the news of the earnings hit. A lot of selling pressure right there with the big wick. Macy's, man, oh man, they're just falling hard. Earnings lower than it was 3 months ago. Not only is the stock's price going down, it's going down with big volume. It's going down with big volume. I'd be careful with Macy's. All right, any questions I need to talk about? I think that covers all of the stocks in my watch list today. Any questions I need to cover? Joey? No? Good. Now, put that over because now I'm ready to take your stocks. Let me go get into the graphs real quick. Now I'm ready to take your stocks. All right. Man, that was a lot to get through. Jay said, yep, is the new saying you got corona. Oh, wow. All right, so now, all you guys were typing in all these stocks earlier. Now the cat got your tongue. We looked at mRNA. Nicolette, I want to look at stocks that we have not looked at today. We looked at mRNA. I want to look at stocks that we have not looked at today. ENPH, the VIX. Interesting call on the VIX. VIX is really high, Bob. I'm with you. WF, is that really MB? That's not a real stock, is it? No.
Wake Forest men's basketball right after.
Man, I don't like you right now, Kev. Tesla. I'm trying to get these stocks up, and gosh darn it. See what you did to me?
It's okay.
All right. TSLA, really? Who keeps putting that extra S in there? I'm not doing that. TSLA. Okay. Tesla. For those of you who are new, all I'm doing is putting in the company separated by a comma. LULU, JK Solar, AAXN, ESTA short. ESTA. Interesting. All right. GSX. I'll take them both long and short, believe you me. MSFT, VERB, AMD, CODX, SQ, comma, Tesla's already in there, OESX, comma, BABA.
Somebody asked for Ford there too.
Somebody asked for Ford, Ford, comma, Luckin Coffee, comma, SFM, comma. All right, no more stocks, no more stocks. I already got Luckin in there, GE, comma, Z. That's a lot of stocks. That's a lot of stocks. Siraj is new. Siraj, I'm going to put your stock in.
Like 5 of those are his.
Oh, are they really, Siraj? You put a lot of stocks in there? No, no more stocks. Stop. Stop, 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 stop. No more stocks. I'm not looking at any more of them. I'm not looking at it. I can't. I got a little bit of time left. Hassan, NVAX. Oh, and I can't always tell you guys no. All right. And going forward, I'm only going to take no more than 2 stocks per person. All right, I just realized Siraj put a lot of stocks. I got to stop that going forward, or else I'll take away from other people who are trying to put stocks in. Just want to put that out there. All right, Roger, what did you say, Roger? I typed in a lot of stocks. What stocks did you say, Roger? SO. I got Southern Company in there. Is that what it is? SO. There it is. Southern Company's in there. I got that in there. All right, if that's what it was, I got your stock in there. I got it. I got you, Roger. All right, real quick. Put these on 3 months graphs. Ford. Every stock in the Russell 2000, please. Jay, go stand in the corner. I'm putting you in timeout. I am so putting you in timeout right now. Ford. It's falling. What would have been a good time to get out of Ford? Somewhere way back here with a 3-8 cross. All right. That would have been a good opportunity to get out of Ford back here. Look at this, ride the stock price. Then he said, yeah, I'm going to get in. And boom. 3-8 crossed again, just like that. Ford is not a good stock. Let's go look at relative safety, relative timing. It says that doesn't make sense. Oh, that's back there. Relative timing on the stock is below 1. Fundamentally, right now, Ford is not a good stock to be in right now. All right, right now, I'm going to say Ford. And I don't even have a rebound yet to look at, except for this. I do have a possibility. What is this candlestick pattern known as right here at the bottom of the panel? The bottom of the graph. What is that? That may be the only saving grace right now. Anybody want to tell me where should I put my money? Says Chris. I would wait. I would totally wait right now. No, it's not a doji, Robert. That's not it's not a doji, Paul. That is a hammer. That is a hammer, and that could be a possible bullish reversal. I need confirmation the next day to confirm it. All right, so that's what Ford looks like. Ford doesn't look like a really good stock to get in now, but that hammer formation on today's candle could be a possibility of a possible reversal. GE, boo, 3-8 cross. Where? Right about here. That was a good opportunity. If you made some money in the stock, good opportunity to get out. But look at that since then, falling, falling, falling. Take off the last close. Whew. Here's a good level of support. Where's it at now? Even though it's a doji, it's below that level of support. I'm not ready. And stop talking about Ford because I drive an Excursion. So, Jay, you're still in the corner. All right. Right now, the stock's price is below that level of support, which was a beautiful level of support from back here at $10.80. Be careful with Ford if you own it. I probably wouldn't be holding it yet. I don't have anything that's showing me a rebound on the stock just quite yet. Say again? On GE. You got me going to talk about Ford still, Jay. Next stock, AMD, was looking beautiful. 3-8 crossed negative here, found a level of support. 3-8 went up. Woo! Get in, make some money. 3-8 cross. Bingo. Good opportunity to get out instead of riding it down right now. Look at, not only did the stock's price go down, look at the volume behind the move. Look at the volume behind the move. People are shorting the stock. And even with today's activity, look at that. Big, tall trees of candles. Now, I do love the earnings per share on the stock. Not the right time to be in it. Not the right time to be in it. And I don't have anything showing me a reversal just quite yet. Next stock, Microsoft. Another good-looking stock. Love the earnings per share. But as the stock is falling, look at the volume behind it. Not only is it falling, people are pushing it down. Now, I got some selling pressure. I got no wick at the bottom, selling pressure. This is creating its own new level of, so actually, here's my level of support sitting at 152.44. I've got some more downside to this. I've got some more. I've got the stock moving from a buy to a hold as well. Not ready to touch Microsoft just quite yet as well. Next stock, Southern Company. Woo! Man, It was looking good. Notice this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 straight. That's 3 straight trading weeks. Southern Company went up. Then it pulled back. That would have been a good opportunity to get out when the 3-8 crossed. All right, it crossed, it stayed, created a level of support, bounced off that level of support, the 3-8 cross for a couple of days, and boom, fell hard again. Southern Company is not a stock that I want to be in right now. Now, it normally, utility companies are companies that you do want to hold. I want to show you something. Not only is it fallen, look at this. It's right at a level of support. See that? Let's make that a little darker. How can I see that? Look at that. That's a beautiful level of former resistance, current support, and where is it stopping? If you still own Southern Company and it falls below this level of 64.03, you might really want to think about taking a lot of that off the table. All right, you might want to take that off the table. Charles, I haven't gotten to ENPH yet, but I do like that it's stopping right at that level of support, which is former resistance. I love the earnings per share on it. I need to see some rebound. And if you're holding it through that, you should not ever have to hold and watch a stock go down. All right? Using moving averages, whether it's the 3 and the 8 or whatever other moving averages you want to use some semblance of moving average to help to let you know when to get out of a stock. Next one, AAXN, 3 and the 8 cross, a little bit of a trying to rebound today, bouncing off a level of support, which is sitting right here at about 77.14. I do like the bounce. Earnings is higher than it was 3 months ago. This could be a possibility. Utilizing these moving averages is a great way to never have to write it, even if you think it's a good stock, to write it down. I'd rather buy as the stock is going up. Notice that on the pullback here, the 3 and 8 did a really good job keeping you in it. But when it crosses, those are great opportunities to get out. Those are really, Saborium says my trailing stop order sold SO today. That was a good call right there, Saborium. VIX is at a long time high. It's higher than it was for the last year. VIX is the volatility in the S&P 500. Because of the coronavirus, people are scared in the market. People are scared in the market, and it shows in the VIX. But I've got some give back on the VIX today with a taller wick at the top. And there we go. That's all I'm going to say about the VIX. I'll put this on a 3-month graph. This is on the S&P 500 short. As the market's been falling, this contra ETF is rocking and rolling. Look at the volume on it. Do I want to get into it now? Well, remember, we talked about on the market timing graph, be careful, still selling stocks short right now. Be careful because we got some possibility. Remember, the market's at a level where it's looking for a bottom. I don't know when it's going to happen, but it is looking for a bottom. Be careful if you're still in contra ETFs right now. That's all I got to say about that. Going on to the next stock, Lululemon. Man, again, if you own it, the 3-8 crossed here. How about even on the pullbacks here? Man, oh man, I don't want to be in Lululemon right now. Let's go. I see a level of support back here, right about there. All right, looking at that low. This is on a 3-month graph. Let's make that a little darker. Lululemon does have some downside to that level of about 218.04. It does have good level, and the volume has been pretty steady on it. I'd love the earnings per share, just not the right time to be in Lululemon right now. All right, where's the blood? When there's bloods in the street, buy. I'm not ready to buy yet until I can look at the stock to tell me when it's okay to buy. OESX, giving me a little bit of that indication because even though it's a red candle, it's an open red candle, which means that the price started at the bottom and went up. All right, when the stock's price saw. I'm looking for stocks that are starting to rise off of bottoms before I jump on board with them. Should I put my money into Macy's? Macy's didn't look good. I wouldn't touch Macy's. I talked about that, Chris. I wouldn't touch Macy's just quite yet. Now remember, I am not doing a webcast that's going to tell you, hey, go buy this stock, sell this stock. I can't do that. All I'm pointing out to you, even in the stocks that you're showing me, I'm showing you what the charts are showing me. So if any of you are holding these stocks and saying, well, I want Glenn to verify that I should still be holding these stocks, I'm not trying to tell you what you want to hear. I'm trying to tell you what you need to really consider. I want to put the facts out to you. If you're in Jinko Solar right now, be careful. Now, the only thing I do like about Jinko Solar right now is I got some buying pressure, and coming off of this high to this level of the low, I got a hammer. This could be a possible reversal pattern, but I need the next day to confirm that. The 3-8 cross, it is at the bottom of a pattern. Let's see if we can get some confirmation before we pull the trigger. All right, looking at candlestick patterns is cool. Tesla, same kind of scenario. All of this talk about coronavirus is hurting a lot of the stocks. The direction of the market affects 80% of the stocks in the market, and we're looking at the graphs, and that's exactly what's going on. Tesla, earnings look good. Volume is pretty steady, but right now, the 3-8 have crossed. And again, whether you feel the 3-8 is good, bad, or indifferent, use some kind of moving average, whether it's a 20-day moving average, a 40-day moving average, a 10 and a 30. I don't care what you use. You need some semblance of a moving average to show that there's no more trend in the stock and that it broke trend. That's important. And that's the real story. As I like to say, that's the rest of the story. And I'm not going to tell you what you want to hear. I'm going to tell you what the graph is showing you. That's what you need, because without that, you're going to still take losses in the stock that you don't need to. Think about that. All right? So let's go to the next stock. EMPH. Man, the stock is falling hard. The 3-8 haven't crossed yet. The 3-8 haven't crossed yet, but it's real close. I do like the open red candle today, a little bit of a rebound, some buying pressure with the wick at the bottom. I do like that as well, so we'll keep our eyes on that. End phase, though, if the 3-8 do cross to the downside, I'd probably take it off the table.
Dumbass, how do you add the 3 and the 8?
All right, question, how do you add the 3 and the 8? Go over to the box that says price, right-click on it. Go down to add moving average. My 3 and 8 are exponential moving averages. So I would go to exponential. Notice that I don't have 3 or 8 here. So I simply click on the number 10. I do it again. Right click on price, go down to add moving average, go to exponential, click on the number 10. Those two moving averages will now show at the bottom of my list. I can change them now. EMA price 10, knock that down to 3. EMA price 10, knock that down to 8. And there you go. That's how you add the 3 and 8 on a graph. Joey, I think Glenn needs another cup of coffee. No, I don't. Tesla puts are going crazy. And you know why? Because Tesla is getting beat up a little bit. A lot of these stocks that are going down, if you don't want to short them, buying puts might be a good way. Baba, interesting. Baba's got that little bit of a bounce. See that? Open red candle, a little bit of a bounce coming off a good level of support that I'm just eyeballing right here. And what I really want to do, though, I really want to see the 3 and the 8 bounce back up. All right, but this could be setting up. Not all of these stocks that are moving down are not bouncing. Excuse me. I like that it's an open candle. I really want more confirmation with the 3 and the 8. All right, I need a little bit more confirmation with the 3 and the 8. Zillow. The 3 and the 8 just went bearish today. Love the move, love the gap up. Was this an earnings play? Yes, it was. That gap was an earnings play, but right after that, stock's price fell. The 3 and the 8 just crossed today. All right, just keep that in mind. If you own Zillow, if you've got profits in it, don't give it all back. Earnings, though, is lower than it was 3 months ago. Don't like the earnings, but the stock's price was moving up. There's no ifs, ands, or buts about it. But stocks that tend to have falling earnings will tend to have falling price. All right, just think about that. Next one. Square. A lot of selling pressure, a lot of wick at the top of the list, a lot of volume going on with it as well. The 3 and the 8 have not crossed yet. If I'm not in Square, I want the 3-8 to cross. I love that it created its own level of support, bounced off of that. The 3 and 8 haven't crossed. Indecision today. I notice where the open and close price on the stock is. Open 81.39, close 81.31. That's what you call indecision. That's what you call a doji. Not much price movement on the stock. Just be careful with it. If you're in it, you shouldn't be in it yet. I'd rather wait for the 3-8 to cross before I jump on board with it. All right, let's go to the next stock. A lot of stocks today. CODX, pharmaceutical stock. How about this stock went up, and what did it do? Fell down. Why? Because the stock virtually went from close price $8.90 up to $15.21. What do you think is going on right there? What do you think is going on right there? That is profit taking. All right, so someone asked, is it good to get in the Codex? Not right now. That's a lot of profit taking. The only people that really made money in the stock are people who were holding it last night before the stock gapped up. They're still making a lot of good money. If you weren't in it, I wouldn't touch it yet until the stock's price goes above the high. Whoever asked me that, that's what you're looking for before you pull the trigger on Codex, even though I know it's a coronavirus stock. Verb, The 3 and 8 just crossed bearish yesterday. A lot of selling pressure on today's candle. I do like the rising earnings. I would wait for the 3 and 8 to cross back up, especially it being a lower dollar stock. I love the move up. It hit. Was this an earnings play? No earnings play on this. It fell hard. The 3 and 8 crossed yesterday. That would have been a good opportunity to get out. Right now, if I'm thinking about getting in, I'd wait for the 3 and 8 to cross. I'd wait for the 3 and 8 to cross. All right, whoever gave me this, ESTA, I ain't feeling it. Now, I will tell you something. The stock is at a level of support. All right, VectorVest drew the level of support. It is at a level of support, but right now below that level of support, if you own this, there's no way to own it. I'm not ready to take a move on this. Even though the stock's price, you know what that is? That's a bullish harami with no follow-through. That's a bullish harami with no follow-through. I'm not ready to touch. I got no candlestick pattern. I've got no 3 and 8. I've got no bounce off support. I got nothing that tells me it's okay to be in this stock yet. All right, and the stock just went back into being a sell. I'm not touching this, not yet. Just like Hammer, can't touch this. All right, Luckin Coffee. A little bit of a sideways move right now. The 3 and 8 about to cross. I like that. Not only is it about to cross, I'd love to see it break through this level of resistance. And you know something? If it does that, where it breaks above that level of resistance and the 3 and 8 cross, I got a profit target sitting at 51.38. So Luckin is at a point where it could be about ready to bounce. I don't like the earnings per share. All right, but if the price action moves the stock's price higher, I've got two things going on here. That the 3 and 8 might be crossing and it breaks through that level of resistance. You know what I would do? I'd put my order in 12 cents higher than that level of resistance as a means to get into the stock. I shorted Esther on Monday. I'm still in the money. I thought yesterday might be a bounce, but it's still bearish, right? Well, there's the bounce. And where did it stop? There you go, I am Future Trends. What do I keep talking about? Did it break through resistance at 39.90? Where did the body end up? Back below that. This is why I say I want confirmation of breaking through that level of resistance, or to the downside, breaking through a level of support. I am Future. Does that make sense? That's going to aid you in your ability to make sure that you got confirmation of the move. Does everybody in the room understand that? Because that's a good question that I am Future Trends just said. Well, I thought it was a bounce. It did bounce, but where did the body end up? The body ended up below that level of resistance. I'm going to ask the question again. Does everybody understand what I just said? Nobody answered my question. Does everybody in the room understand what I just said as a means of looking for confirmation before? Oh, you said ESTA. Dang it, that's why. ESTA, there we go. Ooh. Yeah, there's the bounce, but there's the bounce, no confirmation today. All right, so there we go. Sorry. All right. So I am Futures. Does that make sense? There was the bounce, no follow through today. There was the bounce, no follow through today. So I like that it bounced. Look at the selling pressure, big wick at the candle yesterday as well. All right, so there we go. All right, man, I'm all hopped up. GSX, love the stock. Love the stock. Don't like the earnings. Love the stock. Even on the pullback, a lot of volume. The 3 and 8 still holding. The 3 and 8 still holding. If you're still holding GSX, I'd wait to see if the 3 and 8 could cross. All right, I waiting to see. I know you did, Kev. I know you did. And the last stock, man, I'm tired. Woo! Last stock, NVAX, another coronavirus stock. A lot of selling pressure yesterday, shooting star, but no follow through today on that. No follow through on that candlestick pattern. How about the 3 and 8 was still intact, even as the stock moved sideways? How about even with the day today, the 3 and 8 still intact? Anybody holding NVAX? I'm not going to get into it now. I wait to see if it goes above the high before I jump on board with it. Can you show how to add the 3 and 8 again? Jonathan, right-click on price. Go down to add moving average. You can either add a simple exponential or weighted. All right, go to exponential, click on 10, do it again. Right-click on price, add moving average, go to exponential. Maybe you like weighted, go to weighted or simple. You can add in either or, and you can make these. If you want different numbers, you can change this. Let's say you want a 10 and a 30. Let's do that. Let's go, just use the arrows to go up and down. I'm going to take off my 3 and the 8, and there's now a 10 and a 30. Boom. So if I'm trying to be longer term on the stock, I can use the 10 and the 30. I'm done. I am so done. Hopefully you guys enjoyed today. Good gravy. I am so done. Woo, that was a lot of stocks today. We're going to have a live stock panel next Wednesday, March 4th at 2 p.m. If you're here and you've already subscribed to the channel, don't forget to hit the bell icon to get reminded for it. I'm going to be there with 3 of my colleagues. We are going to look at low price explosive stocks. All right, low price explosive stock. I'm not looking at any more stocks, Jay. Glenn, how is Duke? Better than Carolina. How about that? All right, better than Carolina. Chris is asking, is that a buy? Is what a buy? NVAX? No. And you notice in all of the stocks, before I tell you when to buy, what do I tell you? Let's look at, watching the stock take out the high. That's important. That's on every stock that I look at. I want to see the stock take out the high. Why? Because I'm buying into a continually rising stock. That's it. That's it in a nutshell. I am not going to guess at what a stock is going to do. I never will. I never will. Charles, when is this again? We do this every Thursday at 2 p.m. Every Thursday at 2 p.m. All right, folks, if you like what you saw, make sure you subscribe to the channel. If you've got friends who trade in the market, invite them to come to this YouTube channel every Tuesday at 2 p.m. They don't even have to be subscribers. But if you want them, you feel that they get a benefit of learning about what's going on in the market, invite them. Invite your friends. And again, folks, I'm trying to get us up to 10,000 subscribers. Once we do that, we're going to open up a VectorVest store for you folks. All right, with that, I'm done. My voice hurts today. You guys kept me busy. Really kept me busy. Joey, thank you for answering questions for me. Joey is my right-hand guy. Can I like twice? Yes, Roger, if I could let you like twice, I would love for you to like twice. All right, Mary is here. Thanks, Glenn. I think I got a lot of new people here. All you guys are nice, but I think you got a lot of new people. Thank you guys so much. Invite your friends. Invite your friends. Thank you. Maybe future topic, why the 3 and the 8 EMA are good confirming indicators. I am future. I'm going to tell you why. I'm going to tell you why. They work. I'm going to tell you, put that 3 and 8 exponential moving average on any stock that you currently track. Any stock. That's my answer to you, I am futures. Put them on any stock that you track, and I bet you it's going to do a darn good job getting you in and out of the stock. All right? So, Trade Shark was here all this time? I didn't even see him. Where is he at? Is he here? Jen says, can't wait for the explosive low price. So Jen was here. Thank you for being here, Jen. All right, folks, I got to stop talking. I'm sorry. I'm tired. I need to go. I think I'm sweating a little bit. I love this stuff, and I'm loving that you guys are getting something out of it. When Joey puts the videos up, please comment on them. Tell me if you liked them. Tell me if you didn't like them. Tell me what you'd like to see. Comment, 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 comment. I go through and personally will answer many of those comments that you put out there. Put them out there. Adios. Arrivederci. Ciao. Au revoir. Sayonara. See none of you tomorrow. Later.